The sun's out, the surf's up, we've got a bit of green on the screen. Welcome to this Saturday's Money Market Update. Hey guys, and if you haven't already seen, I'm starting to put on our social media channel, particularly on Facebook and also in our daily reports, chapters of my book, Inevitable Wealth, the companies you need to own, the strategies you need to use to build long-term inevitable wealth. So watch out for that. I'm looking for some feedback on some of these chapters, so make sure you give me plenty of that. Got the whiteboard out for this Saturday's update. S&P up 6.5% for the week. NASDAQ up 6.8%. That's the best week since November 2020. All these economists, all these analysts talking about recession. We could see one, but I'll tell you what, there is something that has been happening in the course of the last 3 months that is likely going to see inflation start to come down. And that is the demand that we've seen in financial markets due to the fact that the average person was feeling so wealthy in 2021. I mean, the markets are going up, everyone's jumping on board, everything's rallying. Get to the end of 2021, inflation starts to soar in the United States, 9%, and we start to see some demand destruction. We start to see some wealth destruction. Bottom line, in the last 3 months, Americans are feeling not so wealthy any longer, as we're seeing right now gasoline prices high. They're starting to pull back with respect to that. We've actually seen a big drop off in gasoline demand, 16% drop in new housing starts, and of course we've seen the NASDAQ down 30% in the first 5 months of this year. The S&P 500 fell down 20%, but is now actually only back down about 12 or 13%. And right now, I think we've seen enough demand destruction, and we're likely going to see inflation start to fall in the back half of 2022. So could we see a recession in 2023? Absolutely, yes, we could. But there is one person and one person only that is going to ensure that we stay out of a recession in the US. And you might be thinking, well, I live in Australia, it's not going to really impact me here. Trust me, if the US catches a cold, Australia is also going to feel unwell. Now, consumer in the US is the number one cause of a recession with respect to the spending. If we see demand start to drop off, inflation start to decline, and we also see consumers in the United States start to spend less money, then we're going to likely see a contraction in the economy, and these share prices that have been rallying in the last few days off these lows, we're going to go back and make new lows. So don't get excited yet. But this is the elephant in the room. Inflation is the elephant in the room. If it starts to come down in the second half of this year, we're going to see the NASDAQ and the S&P rally, and they're more than likely going to hit all-time new highs at the end of this year or early into 2023. Now, why do I say that? Because financial markets have a very strong history of following self-interest. And when I say self-interest, I'm talking about money managers and hedge funds that in 2022 so far have had terrible performance with respect to their overall valuations. They get paid on what they deliver. If they don't make money for investors, they don't get paid big bucks. Yes, they're making a little small percentage off everyone's investment, particularly in a managed fund or a super fund or even most hedge funds that are 2 and 22% fee, 20% of performance. But they're not going to get that 20% of the performance unless they actually get markets to new highs. So if inflation starts to come down and these markets start to get a little bit of a move on in the second half of the year, we're going to see the S&P, the NASDAQ, the ASX, the FTSE, the DAX, the CAC, the Dow Jones, they are going to rally and they're going to rip in the last 3 months of this year. But if inflation doesn't come down from 9% or if it goes higher, and demand destruction and wealth destruction doesn't continue to happen, and I say that meaningfully, I mean, we just need to have people feel a bit poorer and they'll stop spending as much, and therefore the demand will come down. Inflation is caused by demand. And if inflation starts to come down, the consumer continues to spend money, we're going to be just fine. But if we don't see inflation come down and the consumer starts to spend less money, then we're going to have stagflation. We don't want to see that. Some economists are saying we have stagflation now. I don't buy into that theory. And by the way, I've been telling my clients this for the last month. When every economist, every analyst, all the doomsayers are saying that markets are going to crash and we're going to see bear markets for extended periods and we're going to see a recession in 2023, I can tell you now the history books show one thing. Most of them are wrong. You'll hear from all the Michael Burrys of the world who were very successful back in 2007 and 2008 through the GFC with picking the mortgage-backed security crisis and betting against it. Most of them throughout their lives are one-hit wonders, and then they live off the back of that one-hit wonder prediction that they had. Harry Dent's another one. Don't think that you can listen to those people and invest your money successfully. Follow what truly matters. Inflation is the big key this year. The consumers are spending in the United States. Look at Walmart, look at Target, look at Costco, look at Home Depot, look at Lowe's. They didn't have less consumers spending less money. Some of them, Walmart and Target, screwed up with what they ordered and therefore their earnings were impacted. But Costco, Home Depot and others saw increased sales, and inflation was causing a problem with regarding their bottom line earnings for some of those businesses. So therefore the consumers are not spending less money at the moment, and they're wealthier than ever. So right now we just need to see inflation start to tick lower, and once the market buys into that, we're going to see a very, very strong rally in financial markets. So now I'm not saying that markets can't go lower, they could. You know why they could, I've just explained it for the last 5 minutes. But this is a typical garden variety, inflation-induced pullback. We've seen it happen many times before, we'll see it happen again. Markets will recover to go to new highs. And if you've got your foot in the water, not just your toe, get in there, get invested, and keep investing. See you next week.